welcome back to the program. The suspension and replacement of Nigeria's Chief Justice, Walter Onohen, late last week, of course, seemed to have taken the shine out of two major economic issues that were there as we were wrapping up the week. First, the strategic revenue generation initiative, which was announced by the Minister of Finance on Wednesday, and of course that grabbed the headlines Wednesday through Thursday. Then the President signed on the Executive Order number 7 in relation to road construction implementation, or road infrastructure investment tax and all of that. So those two economic stories were overshadowed when the suspension and replacement of the CJN Onohen came. So, but again, so we'll try to shift the political stories out of the way a little bit and get to those two core economic news that came in late last week, try to put them into some perspectives as we start a brand new business week that takes us to the end of the month and start in February. Paul Alaje is a senior economist from SPA Professionals. He's live to us from Abuja studios. Paul, good morning. It's good to have you here on the program. I'm sure the Walter Onohen's saga has been making more headlines, even on social media. It's been a very big story. So it seems to have been it seems to have cast a dark pall over this initiative about the strategic revenue. The Buhari administration is looking for money left, right, and center. It looks like the government is beginning to listen to the fact that it's over borrowing, so it needs to look for money, look inward for more cash flow or revenue, if you're going to put it that way. That's on one hand. Then we have the Executive Order number 7 on road infrastructure. But let's start with this strategic revenue initiative. What do you make of it as an economist?
Looking at taxes as an option for revenue generation for government, particularly looking at VAT for some items, not all items though, for some items, according to the minister, increasing the VAT up to about 10%. I think that is good, and I think that if items that would naturally have been exempted, which includes food and drugs, are still exempted, and I think it's going to make a lot. But beyond all of that, the kind of revenue that we are looking for, I am afraid we might not still get from just 10%, because if you look, let's assume we want to even double the entire VAT that we have collected in 2018 or 2017, it's still not as much as government requires. But the truth is that it's a good initiative. I think economists will support, particularly as it affects VAT. But more importantly is even the 5% we are collecting right now, I think there should be an automated system of collection like we have in United Arab Emirates, who just introduced, and so many countries, Germany, so many countries in the world, such that per deposit, 5% in corporate account now, 5% is removed, debited from source, except if there are special deposits, which could be maybe directors' accounts to the same corporate account. I believe that FIRS will do the needful and also seek support from different stakeholders for this to be achieved, so that we can have more revenue for government to spend and also to build the economy in the coming periods.
Okay, part of this, when the initiative was launched on Wednesday, it was almost everybody were there. The head of FIRS, you have the debt management, you have the customs, and everybody. So it looks like all of them have to sing from the same hymn book, the same page, moving forward, because times are very hard. So where do you see the collaboration here, Paul?
Hello?
Yeah, the collaboration. I was talking about the collaboration between all the revenue-generating agencies that will make this possible.
Yeah, very importantly, the collaboration is very important, because only FIRS cannot achieve this. Commodities that are coming from abroad, it also, you know, the new strategic policy affects excise duty. So you need more than FIRS to achieve this. And I believe that with this collaboration across different government agencies, we're going to see a surge in revenue window for government, particularly 2019-2020 fiscal year, if that is permitted. We're going to see a surge in the kind of revenue that we earn. Remember that we are already toning down on debt, on debt, particularly from outside Nigeria, and maybe also on treasury bills and bonds in the coming period. I think looking for other means of generating revenue, alternative ways of generating revenue, is the way to go. When you compare the debt, when you compare the revenue to GDP, it's one of the lowest in the world as we speak today. One of the lowest even in Africa as we speak. So, sourcing more revenue from taxes and other sources other than debt, I think is the way to go. And this collaboration would ensure if you want to miss FRS, definitely you cannot miss the custom and so many other agencies that are involved and collaborating on this.
So let's shift gear a little bit and bring the new road infrastructure executive order number 7 into it. The president signed an executive order during the time when he's crisscrossing the country looking for votes for re-election. That's very significant anyway, by the way, to still be able to sit down to sign an executive order which goes to one of the heart of what the president's administration is all about, which is road infrastructure and more infrastructure spending. Now the president has seemed to have found the first key to open the door to private sector to come in here.
Yeah, this is one of the best policies I've seen in recent times, particularly under this administration. I have to confess that I sincerely love this policy, and our organization have done our best to study it. Now, people may say, what is in EO7? The good news about EO7 is that it comes with tax credit. So large organization, particularly a medium-scale size organization, could actually directly spend on the economy. What does that mean? The lag you have in collection by government for reinjection of fund back to the economy is there. So in your national income outlay, you are going to see increase in high. It is high that guarantees job, which is investment. It is investment that guarantees job. Unlike when you have government expenditure, where you're going to see some going to concurrent, some going to capital expenditure, we really don't know, 70%, 30%. All of that may not be the case. So private sector, we now invest directly. Part of what government would have withdrawn from the circular flow of income. So definitely, if this policy is implemented starting from today, I can assure you by this time next year, you are going to see a boost in the national GDP, that's in the Nigeria gross domestic product, by implementing this policy. So it's a good one. So what it means is large organizations will, if they identify some project and by the way of procedure, send this to a committee to be set up by the president. If the committee consider and see the project is okay, particularly roads, some have already been identified, about 19 roads have been identified by government, and 6 players in the construction sector have also been identified. Dangote, China, one Chinese company, quite a number of them have been identified for the construction of those roads. And I think that it's a way to go. This is spreading across 11 states from Kano, Kaduna, Kogi State, major roads we've talked about in Lagos, in Ogun State. You know, for me, I think this is the way to go. You're going to see a boost in GDP. If it's properly implemented, you're going to see a boost in employment. I think this should have been done 3 years ago, or 5 years ago, or 10 years ago. Private sector now has a window, particularly those large organizations, listed and unlisted, have that window to invest directly in the economy. And for God's sake, what matters to ordinary people, Nigerian, is not what is the procedure of economic expansion. At the end of the day, what matters to us is as the economy be expanded, as more jobs being created, and this would really not invite inflation in any form, because this money would have been withdrawn, and we hope that would have been spent back on the economy. But that is not the issue. The fund is going to go straight. So what are the things I think government should now consider? Monitoring, because of private sector, private sector come with its own selfishness. So how do we monitor? How do we ensure control? And more importantly, standardization of EO7. If this is done, it's going to be good news for private sector because you really don't have to bother your head as to if government is chasing you with taxes, particularly corporate income tax. Again, for government, it's a big news because part of the promises of government will be met, and the people that will win at the end of the day will be the citizen, because most of the road we've been saying that government should do perhaps may just be coming from private sector.
Okay, you talk about monitoring and all of that, which is going to be a major issue here on implementation. Some folks have been on social media and saying perhaps we need to watch this very closely so that companies don't spend 50 naira and ask government for 500 naira.
Yeah, we expect that 50 naira, 500 naira. This is what my advice would be to government, is to use some persons who are skillful in private sector. I appoint some consultants who have similar experience, local and abroad, to monitor these projects. If this is well monitored, I understand, like I mentioned, selfish interest is one of the hallmarks of private sector, but not all private sector companies or all companies are corrupt. I don't believe so, because the question we should ask is, even when government was constructing most of the road directly, you see big figures in the budget, you see huge releases, but when it comes to implementation, it's another issue. So when you know that you are not going to get credit, or you know you are not going to get the entire credit until the fund is spent, until there's some sort of approval for implementation, then I believe that the private sector will want to do the needful. Everybody will want to be sufficient, but the essence of government is right implementation.
Okay, Paul, let's leave it there. You're talking about the profit motive of businesses. The first DNA in anybody's in business is profit motive. Thank you very much, Paul, for raising the curtain on this conversation, which will continue in the days and weeks ahead as we get to try to understand the new Executive Order number 7 and the Strategic Revenue Generation Initiative. Do have a great day and a profitable business week ahead. Paul Alaje of SPA Professionals. So one of the big industries that or sectors the government is looking at is the non-oil sector, and in that non-oil sectors where you have agriculture and, of course, palm oil is one of the most consumed edible, if not the #1 in the world. So there's a new report from AfriInvest focusing on this global business and Nigeria's space in it, and that's what Abiola Bimisola, who is an investment research analyst from AfriInvest, is discussing with us here in the studio. Good morning. Thank you for coming.
Good morning,
Abiola, great. I like palm oil. I grew up on a farm, so I know a little bit about the what they call how to get it done and all of that, the palm tree and palm kernels and all the traditional way of doing it. But it's not that rudimentary anymore. It's a global business. Definitely. It's worth billions.
65 billion naira. $65 billion.
$65 billion globally, yeah. And this is where we want to play. So, what is in this report? Give us some highlights about exactly why this should interest us.
Okay, so we decided to look at the oil palm sector in Nigeria, looking at the players in between the sector, the two main players listed on the Nigeria Stock Exchange, Okomo Oil and then Presco. We looked at their business, looked at their financial numbers, and then we spoke to the management of both companies to try and understand the business and what are their plans for the future going forward. What we could conclude following our discussion with them and our analysis is that for the sector, we believe that there's full steam ahead. Profitability and revenues for the sector will continue to grow into the future. And then we think that this is actually the right time for investors not yet positioned in these two stocks to try and position in them and take opportunities that present themselves.
Very interesting. So let's check in through with the global oil palm sector. Southeast Asia is the hub of global production of oil palm.
Yeah, that's correct. That's correct. So one of the things driving oil production within Southeast Asia is that they've been able to invest very well in land plantations for oil palm. So based on our findings from the Food and Agri Organization, we realized that about 65% of global oil palm land resides within Southeast Asia. So you think about they have very large plantations that are as big as forest reserves being used to plant oil palm. So, which is not surprising when you think that about 80% of global production from Thailand, from Indonesia, both countries, Thailand, Indonesia, and Malaysia, contribute around 84% of global production. So we think that it will continue to remain like that for these countries because they've invested in the plantation, and output will continue to grow going forward into the future for them.
Yeah, if you look at the oil price and consumption and what you're looking at the market right now, I just checked with Bloomberg yesterday. It's just about $2,280 as far as palm oil is concerned. That's far way more than crude oil.
Yeah,
in terms of pricing. But if you look at this chart that you folks put together, thank you very much. Is to say that we see the trend between the production and consumption almost on the same trajectory.
Yeah, so what we've seen for the market currently is that the market is in the oversupply status. And the oversupply status in the market is driven by, we've seen that recently in 2018, there was favorable weather condition. I think that began around 2016. Between 2016 and 2018, there's favorable weather condition in the oil palm market. So what that has led is that companies within that sector have continued to produce because the trees have produced enough fresh fruit bunches, even more than normal period, which is driven by the abnormality of the normal weather pattern. So we're also saying that even in terms of weak demand, demand prospect has also been weak. And this was driven by, we've seen recently in 2018 on this anti-oil palm campaign, especially in the EU, which is driven by animal rights activists saying that when oil palm is harvested in Southeast Asia, we've seen that the plantations are falling and the wildlife within those places have to be displaced and sometimes are killed. So we've seen that there's beginning to be anti-oil palm protests. So this has led to like a sort of weak demand for oil palm in the market. So based on these two dynamics, we've seen that oil price hits a 3-year low in 2018, around October 2018. But if you look at the chart, just as you presented, we've seen that in Q1 for the good part of 2019, we've seen that the price is increasing again. This increase in price is just being driven by what is happening in China. So China is celebrating their lunar year. So whenever they celebrate the lunar year, there's a lot of demand for oil palm. And again, this follows that China, India, and then EU are the biggest consumers of oil. So whatever happens between those three countries will always determine what you see with oil prices.
Okay, bring it home. Let's talk about the Nigerian oil palm industry and our status as we see our own market share. We have the landmass, but we're not planting massively. Okay. And I'm sure most of the trees we have are outgrow their productive years.
That's correct.
So speak to this.
So within the market, Nigerian market, the Nigerian market is to control around 40% of the global market share between 1950s to 1960s, and which has actually tapered to about 1.4% today. A lot of factors can be said to have caused this decline. One of them is the fact that about 70% of total production is being controlled by smallholder farmers. So when you talk about smallholder farmers, you're talking about households and normal farms. Small farms are less than 100 hectares in terms of the capacity in terms of the hectares of the farm. So you're saying that about 70% of all the total production is being controlled by these smallholder farmers, which use crude methods to produce this oil. So because of
traditional method,
they use the traditional method, just like you described when you were growing up. So it still remains for Nigeria. This is even despite the fact that we've actually invested a lot. In terms of it took that the amount of land that's being used to plant oil palm is around 3 million hectares for Nigeria, which is actually significant. But the oil palm, the yields are actually low. We also attribute it to the type of oil palm seeds that are resident within Nigeria. So the Dura variety is actually more common within Nigeria, and this variety has a very thick shell. So the amount of oil that can be extracted from it is lower than Tenera, which is being planted in Malaysia. Okay,
so where do we go from here in terms of the pricing, the constraints, and how does it all come into the books of the listed oil palm companies? There are a few of them that are not listed on the market or delisted a few years ago, but they're still there as companies and they're still doing business. Okay. Maybe they'll come back to the market one day.
Yeah, we hope that they do come back to the market. The market is receptive of them to come back.
We'll work on them.
So for in terms of pricing within the market, in 2015, the CBN introduced the list of 42 items restricted from FX. That's a policy on its own. It's been one of the drivers of premium pricing within the markets currently. The market prices between Nigeria and the global prices are significantly different. The average prices, for example, in 2018, based on our estimates, Nigeria was around $1,300 for oil palm within Nigeria compared to the global price. The global prices are around $533 US, within 2018 based on our own estimates. So we think that because of this premium pricing, companies within the sector will continue to earn sustainable profits, given that these import restrictions remain. However, we think that some factors remain to be constrain the growth of the industry. For example, like I mentioned before, the fact that we have large number of smallholder farmers within the industry is a significant drag to productivity within the industry. We think that you want to say something?
Yes, we need to fix this issue of smallholder farmers. I think every time we're discussing commodities, this issue of smallholder farmers, and sometimes it doesn't look like it's peculiar to Nigeria. I think it runs across a major issue we need to fix in the agriculture sector.
Definitely.
In the African continent. But let's continue this conversation some other time, if you don't mind.
Okay, no problem.
Thank you very much. I know you've got a lot to talk about. You guys wrote about 42-page report. You want to spend 10 minutes to talk about
what
it.
We think
quite a lot.
What we think is that investors should really report, and based on the report, they can be able to take positions and take decisions on
I'm not an investor, but I've read the report. And I'm sure those who want to make money will do a lot more digging than I did.
Definitely.
Thank you.
Thank you so much.
Thank you. Investment research analyst at Afrinvest. When we come back, of course, we'll go back to the marketplace. It's the morning after an August suspension and replacement. How's the market shaping up in the first hour of trading?